Policybazaar has become a go-to marketplace for most people to buy insurance. They keep innovating to come out with customized products, and they are back with one such product that has three components of insurance, and those are health, wealth, and life. I'm Aprajita, a certified financial planner and a financial journalist, and today I have with me Vivek Jain. He's the head of investments at Policybazaar. He will tell us all about this product and why you should buy it, who should buy it, who should not buy it. So let's begin. So when I first got to know about this product, so the first question that came to my mind was about its complex structure. Insurance has to be simplified. It's already way too complicated. So why combine health, wealth, and life in one product?
Well, I think while it may look complicated from the outside, but the wealth and health solution is actually a simple product. What we have done is we have combined Tata AIA Fortune Pro, which is a market linked plan, with a health insurance by Niva Bupa, which is Elixir. And what it gives is a combined solution for our customers where they can grow their wealth, they will have health cover, and at the same time a life cover in the same. So it is a combination where the customer can get all the three things in one solution.
Okay, so what are some key benefits that you would like to highlight?
The first benefit is wealth creation. Second is there is a inbuilt health cover of 10 lakhs which comes from the Niva Bupa Elixir. One very unique thing about this Elixir is that this product freezes your age for 10 years. So the premium that you pay at the age of say 25 gets frozen for the next 10 years up to the age of 34, which is very unique, because if you look at what has happened in the last 2-3 years during COVID, the healthcare costs have gone up significantly, and so has the health insurance premium. So if you are able to block your age for the next 10 years, then it becomes a very strong proposition. And the third thing, as I said, is the 10 times of annual premium of Fortune Pro as the life cover. So there are three parts of benefits that a customer will get. Apart from this, in terms of the tax benefit, the market link part, ULIP part, is basically eligible for tax benefit under Section 80C. The Niva Bupa Elixir part of the premium is eligible for benefit under Section 80D, and the whole maturity corpus is eligible as tax-free maturity under Section 1010D. So there is a triple tax benefit. Here, one catch is that the total premium should be less than 2.5 lakh rupees annually for the Fortune Pro.
Now, just to simplify, if you can tell us briefly that who should go for this product and who should not.
So I think people who are young in their mid 20s or early 30s and who don't have a health insurance cover right now, and especially like I think youngsters still feel that buying health insurance may be a waste of money at this age. I think they should go for this kind of a product. One, because you are locking in your age for the next 10 years. So your renewal for the next 10 years will be at the same premium in the health insurance policy. Plus, even at a nominal return rate of 8%, the invested amount for the 10 years will get returned in 20 years. So in a way, your health insurance becomes free. People who already have a health insurance cover may not require to buy this product as such, unless they feel there is still value for them, but only that for the next 10 years their age will be fixed. So though they can also explore it, but may not be a very strong proposition for them.
And in health component, can people add family floater having more family members, or it is solely for individuals?
So right now in phase 1 it is only for individuals, but in phase 2 there is plan to add family members as well.
Okay, now the most important question about claims experience. So that is the moment of truth. And as we know that people have this apprehension that insurance companies, they usually reject claims. And in this case, people will have to deal with two insurance companies. So what about claims experience? How do you ensure that? How are you going to support people?
So I think we as Policy Bazaar have always stood with our customers. be it claims in the health insurance space or in the life insurance space. So even for this is a solution that we have co-created with Tata AIA and Niva Bupa. As Policybazaar, we will help out all our customers who buy this product in the claims process, be it with Niva Bupa or with Tata AIA. And we have a very strong focus on resolving claims for health as well as life insurance.
So now touching upon another aspect of investment in insurance. So in financial planning, I'm a financial planner, and we are often taught, and this is basic principle, that you should keep your insurance and investments separate. It's not encouraged to go for investment in insurance policies. But when I speak to different people, common people, and when I tell them about term insurance plan and saying that you are not going to get anything back if you live through the policy period, but each year you will have to pay premium, that they don't like that concept. But as the moment you tell them about investment in insurance, they go for it. Even though the second will come at higher prices, higher premiums, still they go for it. So just touching upon this aspect about term plan and investment in insurance, who should go for which one?
See, at the onset, these are two different plans and they satisfy different needs or goals of a individual. Term insurance is very important, and I would recommend everybody should have a term insurance plan wherever there is dependency on his or her income for the family, because that I think is very important. The investment come insurance plans are actually a very good tool when it comes to goal based planning, for example for your child's future or for your retirement, because in long term these gives very good return. Like for example, I'll take a couple of examples to explain the insurance linked investment plans. See, if we talk about child education, right, there is a very unique feature in investment insurance plans, which is basically child plans, which is called the waiver of premium, wherein in case of death of the parent, the future premiums are paid by the insurance company, and there is a life cover that gets paid out to the nominee, which is the child. And there are plans which also offer a monthly income benefit for the next 10 years, which can be used to pay the school fees or the college fees for the child. So this is a very unique feature that is only available in insurance child plans. No other financial asset will give you these kind of solutions. So this is for child education. The other part which is very interesting about investment and insurance plans is the guaranteed return plans. See, above 5 lakhs, the maturity proceeds will be taxable as income. So right now it is a very good time to lock in guaranteed returns, because insurance companies offer guaranteed return plans with returns as high as 7.5%, and they are absolutely tax free. Like when we compare it with a similar instrument which is like a fixed deposit, the returns are, yes, now the returns are in the range of 6.5-7%, but they are taxable. So if somebody is in a 30% tax bracket, it effectively comes out to about 4.5-5%, versus the guaranteed return plans are still offering 7.5%, and that is completely tax free. So this is again one thing that is very popular, and why people are getting attracted towards the guaranteed return plans.
Yeah, but if there are other investment products like mutual funds, so a combination of term and mutual funds may come out much better than a guaranteed plan having 7% return.
So see, again, I think mutual funds, the correct way to compare mutual funds is with ULIPs, because ULIPs are also market linked investment insurance plans, right? So I think the correct comparison would be with mutual funds and ULIPs. There, I would say if somebody has a small term, short term horizon, maybe say 1 year, 2 years, or 3 years, then they should go for mutual funds. But if you have a horizon of 5 years plus, then definitely ULIPs are a very good option for goal based planning. Like for example, there is no mutual fund that will offer you a waiver of premium option, like I mentioned earlier. And similarly for retirement also, we have very interesting solutions in the insurance space, which are not available in mutual funds. For example, there is unlimited fund switching that can be done. There is no exit load if you move from debt to equity and equity to debt. And within the same ULIP plan, you can get as high as 10 funds in the same plan, and which can be a mix of debt and equity. So you can create a portfolio in a ULIP plan, versus in mutual fund, you will have to do that in individual folios.
Now touching upon this aspect about old tax regime and new tax regime, so it seems that government will gradually phase out the old tax regime, and people generally they buy insurance at end of the quarter, February and March, because it has some tax benefit, and that is the primary reason. I believe this should not be the primary reason, but it seems to be. So your take on it, once old tax regime is gone, then people's inclination towards insurance will go down, or what?
See, I think there are two parts of the tax benefits that people get when they buy insurance plans. One is the deduction under Section 80C. Yes, that may go away with introduction of new regime. But there is also a benefit of Section 1010D, where the maturity amount in case of a ULIP plans is tax-free if your annual premium is less than 2.5 lakhs. And for a guaranteed return plan, for a non-ULIP, it will be tax free if your annual premium is up to 5 lakhs, and this is effective 1st of April 2023. And given most investors or most people who buy policies, the investment premium is less than 2.5 lakhs or 5 lakhs. 5 lakhs and 2.5 lakhs is a huge amount for most of the consumers. Given the 1010D benefit, which is tax-free maturity, will still remain, I think there will not be a lot of people moving away from insurance investment plans. Yes, but there will be some people, there will be some impact that people will look at, that 80C deduction will not happen. So there may be some impact. But I think given that 80C deduction is only 1.5 lakhs, right? And there are many ways in which your 80C deduction can get covered through PPF, through even your children's fees. And there are many, even housing loans. So anyways, a lot of people already have the 1.5 lakhs of 80C limit exhausted when they buy insurance. So there will be some impact, but I think the impact will not be very high, because the tax-free maturity benefit under Section 1010D still remains both in ULIPs and in the guaranteed return plans. And that benefit, if you see if you compare ULIPs with mutual funds, in mutual funds there is a LTCG or a short-term capital gain tax, and even in fixed deposit, the income or the profit that you make from fixed deposit gets added in your income. Versus in a guaranteed return plan, under 5 lakhs, even after you buy it after 1st of April, it will be tax free.
So your new product offering has health and ULIP, and ULIP is a market-linked product.
Yeah.
So any risk that you would like to talk about to our viewers?
See, any market link plan has a risk of the money going up and down in the short term. But there are two things that our viewers should keep in mind. One, the Tata AIA Fortune Pro has 10 funds in to offer, which includes a bouquet of equity funds and debt funds, and fund switching is allowed between these funds. So in case the market is going down, they can move their money from equity funds to debt funds, and when the market starts improving, they can move their money back from debt to equity. So that way the money is safeguarded. The other thing is that given this is a longer term product, if the policyholder is paying for say 10 years, one, it will average out the units, and the portfolio will be in a much better shape. And given the Indian economy is doing well, still there can be ups and downs, but I think over 10 years there will be a good return that should come out for the policyholders.
Thank you so much, Vivek, for taking out time and addressing all these questions. It's been really great session.
Thank you so much, Aprajita. Nice talking to you.
The most important takeaway that I want to leave you with is that insurance is a necessity. You buy it to protect your family. You don't buy it to save taxes, or you don't buy it to create wealth. So if you're a savvy investor who can explore different kind of products, then you should go for a term plan along with mutual funds or any other investment products. But if you cannot do that, if you are not savvy enough, then such customized offering from Policybazaar, the one ULIP plus health, could really be of use to you.